I was reading an article this morning and it reminded me of something that a lot of non-Americans don't know and are often surprised to learn. And that is that non-U.S. persons are required to pay estate tax on their U.S. assets, and this includes U.S. stocks. The thing that surprises most people about this is you could have a situation, for example, where you have a German living in Germany that's never been to the United States, but has U.S. stocks in their portfolio, in their brokerage account in Germany. Well, if that person dies, they owe estate tax on those U.S. stocks because those U.S. stocks are considered U.S. property for U.S. estate tax purposes. Now, while Americans get an estate tax exclusion of $11.4 million, non-U.S. persons only get an estate tax exclusion of $60,000. That means, as an example, let's say you have a non-American that has $1.5 million in their portfolio of U.S. stocks and they die. They only get an estate tax exclusion of $60,000. That means they're going to have to pay U.S. estate tax on $1.44 million. And on that amount, the estate tax rate is 40%, which comes to $576,000. That means of the $1.5 million in stock that this non-American owned, his heirs are going to get less than $1 million. Now the estate tax, the U.S. estate tax ranges from 26 to 40%, and even if you're at the lower end of that tax bracket range, 26% is still a substantial amount of your wealth. And because America is one of the biggest commodity economies in the world, it's very rare to find a portfolio somewhere in the world, whether it's managed or self-managed, that does not have U.S. stocks in it. Most investors, even small investors, have U.S. stocks in their portfolios. And especially when you start talking about high net worth individuals and ultra high net worth individuals, they often have a large portion of their wealth in U.S. stocks that are held in their own name and completely unprotected. It never ceases to amaze me how many times I sit down with a new client and come to learn that they have a significant amount of wealth in U.S. stocks that they would be subject to estate tax on if they died. Now, there's a few easy solutions to fix this. One, you can own them through certain foreign trust structures. You can own them through a foreign corporation. Those may have their own tax consequences in and of themselves in the person's home country. But the point I'm trying to make is if you own U.S. securities, you should do some and you're not an American, you should do some planning because they're going to be subject to estate tax. And I think most people want to leave their heirs as big of an inheritance as possible. Now, this has been an area of tax that the IRS has kind of ignored for many years. They haven't really enforced it. And the article that I was reading this morning was basically how the IRS has determined that there's a lot of non-compliance in the area of foreigners filing their estate tax returns and paying their estate tax. And this is an area that they're now going to be focusing on. They want to bring awareness to it. They've revamped the frequently asked questions sections of their website. And based on my experience with the IRS, as time goes on, they're going to do more things to raise awareness, and they're also going to do more things to enforce the estate tax because there's a huge amount of money in estate tax owed by foreigners that's not being paid right now that the IRS definitely wants to collect. So the point that I'm trying to make is if you're not American, you're invested in foreign securities, you should really think about doing some planning. If you need some help doing that, give us a call at Esquire Group. We can definitely get that set up for you. But even if you don't use us, do something.